Welcome to today's video on self-insurance. Today, we'll dive deep into what self-insurance is all about, how it works, and whether it might be a good option for you. We'll cover examples, pose some pertinent questions, and provide detailed answers. By the end of this video, you'll have a solid understanding of self-insurance. So, what exactly is self-insurance? Simply put, self-insurance means setting aside your own funds to cover potential losses instead of purchasing insurance from a third party. This approach allows individuals or businesses to retain the risk themselves, accepting financial responsibility for potential losses. Let's consider an example. Imagine you own a small business with a fleet of delivery vehicles. Instead of buying commercial auto insurance, you set aside a fund each month that will cover repairs or accidents. This fund is your self-insurance. Now, let's discuss the data behind self-insurance. Data analysis is crucial to understand if self-insuring is a beneficial strategy for you. For businesses, this involves analyzing past claims, maintenance costs, and potential future risks. Consider the following data from a hypothetical company over the past 5 years. Here, we see the annual claim expenses for the company over a 5-year period. By averaging these expenses, the company can determine an appropriate amount to set aside each month for its self-insurance fund. Self-insurance isn't without its risks. Consider the possibility of having multiple large claims in a short period. You must assess whether your self-insurance fund will be sufficient to cover unexpected substantial losses. Let's address an important question. What are the advantages of self-insurance? Firstly, there are potential cost savings. By not paying premiums to an insurance company, you can save substantially. Secondly, there's cash flow flexibility, as you're not bound by rigid premium payment schedules. Lastly, you'll have direct control over the management of your risk funds. Here's an example of cost savings in a self-insurance scenario. Let's say a business traditionally pays $50,000 annually in insurance premiums. Over 5 years, this amounts to $250,000. If the business decides to self-insure, they only spend $150,000 on actual claims over the same period, leading to a saving of $100,000. On the flip side, let's talk about the disadvantages. One major drawback is the exposure to high, unexpected losses. There's also the need for robust financial discipline to ensure sufficient funds are always available. Finally, managing a self-insurance fund requires administrative effort and expertise. A common question is, who should consider self-insurance? Generally, larger businesses with sufficient cash reserves are better positioned for self-insurance. However, individuals with considerable assets can also explore this option, particularly for assets that are typically covered by insurance, like property or vehicles. Let's clarify the concept with another example: personal self-insurance. Imagine you have a property worth $500,000. Instead of buying homeowners insurance, you decide to self-insure. You set aside $10,000 annually into a separate fund. Over 10 years, you save $100,000, which you use for any potential repairs or losses. It's essential to approach self-insurance with a comprehensive strategy. This includes setting up a dedicated reserve fund, regularly funding it, and investing in loss prevention measures to mitigate potential risks. Here's a question for you. How can you determine the right amount to set aside for your self-insurance fund? Start by evaluating your past expenses, consider future potential risks, and factor in your financial ability to cover large, unexpected losses. For businesses, advanced data modeling can help predict future claims more accurately. By analyzing historical claims data, companies can project future claim expenses and adjust their self-insurance fund accordingly. In summary, self-insurance can offer significant benefits, including potential cost savings and more control over risk management. However, it's essential to have a well-thought-out plan and discipline in maintaining the self-insurance fund. Whether you're a large business or an individual, self-insurance can be a viable option, but careful consideration and planning are key. Thank you for watching. We hope you found this video on self-insurance informative and helpful. If you have any questions or need further assistance, please don't hesitate to reach out. Don't forget to like, subscribe, and hit the bell icon for more finance-related videos. Until next time, stay financially savvy.